At IBCanada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
Hi there, my name is Marena Sidhu. I am here with Mary Chow Ivanovic and Kathleen Berg, and they are the two powerhouse ladies with the IBCanada Group. And we just thought we would get together for a women's discussion, kind of speaking about just things that generally affect women more than men.
There are a lot more women now that are sort of maybe the major breadwinners or the ones that make the financial decisions, or at the very least, there are active participants in the financial process within their marriage, right? Mm-hmm. So I work with a lot of very sort of successful financial women, and it was sort of a natural transition, right? Women are very relationship based, so these were connections that I had, and it just sort of grew from there.
Amazing. I want to ask both of you, and I'll start with Mary. I can ask the general question about, what do people love about infinite banking? But I wonder if you have some insight on why specifically women love infinite banking. Maybe just highlight those points of why women love infinite banking. Let's start with Mary.
Yeah, okay. So, for me, I think I'm appropriate to talk about work-life balance. And for me to respond to that questions, I'm going to have two responses, but both true. I could go with a traditional answer first. It's hard, okay? I'm part of a sandwich generation and taking care of my elderly mom when my father passed away a few years ago. And I have a teenage son. And in my case, I also have a teenage husband. I'm sure a lot of women out there can relate to this statement or something similar to it. So, but another way of looking at that, and this is the way I choose, is to see how powerful women really are. And I appreciate and give myself a high five every day. I quietly congratulate myself on being a PhD in prioritizing, writing a new thesis every day as I get through, creating time and space for things that matter, and finding a way and time to exercise my body and mind while completing other tasks or spending some family time. So for me, it's a matter of focus, priorities, and one more key ingredient, which is self-appreciation. Give myself a high five. But this way of thinking did not come easy, and it was not natural for me. I had to go through a lot of self-realization and self-reflection. I also pick up many valuable techniques and practical tips by being a practitioner in the financial services industry. And there's a lot of misconception out there about what a financial advisor does. And there's way too much focus on various products and pricing, and nowhere near enough focus on the emotional impact related to various life events. So again, a solid infinite banking plan can bring financial and emotional stability that is needed to weather storms and make better life choices. So let me connect all of this. So in order to have any work-life balance, everyone needs to have basic needs like food, shelter, and safety taken care of. By its nature, properly structured infinite banking plan provides a foundation for this and provides much needed emotional comfort. It reduces or even eliminates stress of things like rising interest rates, rising inflation, falling investment values, and falling real estate prices, and so on. Having access to capital when needed and having control of your finances provides peace of mind that free you up to focus on other things in life that matter, like your health, family, travel, continuing education, whatever those other important things may be in one's life.
Yeah, I think you bring up some really great points. Personally, I'm majorly into personal development. And one of the things I read most recently was one of the major differences between men and women is that women, above all, although they want respect and they want all these other things, but above all, they want security. If they only had to choose one, that would be it. For men, it's respect. And, what I'm hearing from you, and I would love for you to elaborate on, Kathleen, and answer whatever else you'd like to about that question, is that the infinite banking concept really it hits the security factor. It really hits sort of the crazy balance that women have in their brains, in their life. It kind of have your cake and eat it too kind of concept.
Absolutely.
So if you could elaborate on that, Kathleen, that would be lovely.
Yeah, I mean, Mary did such a good job of hitting so many salient points. And it's one of the reasons why I call these infinite banking policies like the ninth wonder of the world. I guess the eighth wonder of the world is compounding, which is very present in infinite banking. But I think when it comes to women, just kind of wrap what Mary said, is that for women, it's not so much about the return. It's about the benefits, right? Men, and this is a generalization, not everyone's the same, but men are often more return biased,
right?
Where women are more focused on not just like the return, but the features and benefits that you get from the solution. Mm-hmm. So within infinite banking policies, it's just remarkable, like how your life can be at ease. And if something goes wrong in your financial world, like high interest rates or falling stock markets, that this policy, it really is the foundation, an amazing foundation to any financial plan, in that it's just this amazing base. It's a fabulous kind of storehouse of safe money. And like you said, women want security and they want to kind of know where they sit. And so infinite banking policies really represent that for women. And that's why it's just so attractive. But they're also not losing access to their capital, right? Like liquidity, use, and control. Mm-hmm. Like often RSPs, like contributing to an RSPs might, lock up that money. I see so often in my practice that people end up needing money at some point in time. And if everything's in the RSP, then they end up taking it out at a higher tax bracket. So they just love the security and the flexibility and the ability to have access to their capital.
Choices.
Mm-hmm.
Choices is a big one.
For sure. Yeah.
Having your cake and eat it too. I mean, women, there's some stats out there about women living longer. There's stats about women taking less risk. And again, to your point, it's not everyone, but these are general statistics, right? And so, that kind of adds to that. Okay, Kathleen, next I'm going to ask you, because you said the majority of your clients are women. When you talk to them about infinite banking, how do they initially view infinite banking? Do they think you're just trying to sell life insurance, or what is their initial reaction?
No, not at all. Infinite banking is, like I mentioned earlier, is an amazing foundation to any financial plan. Women are often in a precarious position in that they live longer than men. They will typically make less money than men in a similar role. Mm-hmm. And they often, not always, but they're a little bit more risk adverse. And so that means that the returns might be less. And so all of those factors lead to basically a lower kind of standard of living and lower income in retirement. So the infinite banking policy is not about insurance. I mean, certainly the primary goal when we look at covering someone for life insurance is making sure we cover the insurance need.
Right.
But it's all those amazing features and benefits that an infinite banking policy is wrapped in. Yeah. That fact that it can save your retirement income is great. Like without an infinite banking policy, without permanent insurance in retirement, we're all going to be relegated to living off of a much smaller proportion of our money. The safe withdrawal rate is probably only about 4% of our savings. Mm-hmm. And the reason is because we typically want to have a safe pool of money in retirement, like guaranteed investments, right? There are very few people that are going to be 70 or 80 that are not going to need to have a safe pool of guaranteed income.
Yes.
But today, a GIC, a 10-year GIC is not even earning I don't even think it's earning 2%.
No.
And then that's taxable.
Mhm.
So if that's your world versus if you have an infinite banking policy, that can, the internal rate of return on the death benefit, we can't talk about really what rate of return these policies give you because we don't know when someone's going to, pass away. But
Right.
based on a life expectancy,
Mhm.
these are sweet 6 to 8% rates of return in the policy. So compare that to, a GAC, and it's a much better safe storehouse of wealth with a better rate of return.
Yes. And for anyone who's watching this video for the first time and haven't checked out all the other videos, I mean, there's plenty of educational videos, so don't get confused by what she's saying, but hopefully that creates some interest for you. Mary, do you have anything else to add about what we're talking about here?
No, Kathleen covers almost everything, but one last thing I want to talk about before we move on to the next topic is, whether an individual buys life insurance or not, at the end of the day, it would not make a tangible difference in my life as an advisor, but it could make a significant difference to that individual and their family. That's why I see that. Yeah.
Oh, isn't that the truth?
Mm-hmm.
Oh, it's, you have a bunch of clients, so it's no skin off your back if they don't want to properly, whether it be protect themselves or, make a plan, but it's definitely skin off their back, right?
Mm-hmm.
Yeah, that's a really good comment. Thank you.
If I could just add to that a little bit.
Yeah.
When we look at term insurance, which is like renting your insurance, that is or can be a true loss if there isn't a death that occurs within the term period.
Mm-hmm.
When we look at permanent insurance, that you can access your capital out, this is a financial decision that whether things go good or things go bad, you are still a winner, right?
Yes.
And it's important that when we look at your financial model, that we make financial decisions that you are going to be a winner no matter what happens, right? With term insurance, if you don't pass away in the term, you're a financial loser because you've paid into that the whole time.
Yeah.
With these infinite banking policies, you win either way, right?
Mm-hmm.
If you pass away prematurely, there's coverage for your family and you can feel secure in knowing that. If you live way too long, the compounding tax advantage growth is also great. So people are much more open to these infinite banking policies because they know that they can access that capital and they're not going to be a financial loser in that decision.
I love the way that you phrase that, because correct me if I'm wrong, the term insurance world pays out 1%, is it?
Yeah,
that's
if that,
about 1%. Yeah.
I mean, there's a reason why it's a lower premium.
Yeah.
Because there is such a small chance of a payout. Yet it would be irresponsible, and we hear stories about it all the time, of the death of a person who has a family, and it's financially devastating if they don't have coverage.
Recently, I heard a story of, did what they were told to do, buy term, invest the rest, that whole statement. And so she did, and she was an older woman and she had a variety of things happening in her life. The particular situation that she was dealing with at this time was that she was taking care of her grandson because for whatever reason, the parent was unable to. Certainly she would have remortgaged over the years, because everybody likes to think that when they get their first mortgage that this, 35-year amortization is going to be it. But we all know renovations happen. I know this coming from the banking world. And then all of a sudden you still have a mortgage at 65 years old, 70 years old, but you don't have any insurance. And the quote that was given to that lady was something completely unaffordable. It was like $500 a month or something like that.
Mm-hmm.
So what the result is that the person ends up being uninsured.
Yep.
And you
happens all the
basically
time.
money down your toilet.
That's the way term insurance is priced. So that in and around 65, the price is unbearable and they drop it, right?
Yeah.
And when life expectancy on average is 80 to 85.
Mhm.
So, but conversely, if you own your insurance and don't rent it, then and you pay your premiums and it remains in force, you will always be a winner and or your family in that scenario.
Amazing. That brings me into a major topic about GoFundMe. So this is something that has bothered me for a very long time. I mean, we're all on social media. We hear on the news different campaigns to go fund that family, whether it be the man or the woman, the other spouse was left behind because there was no insurance. I said, I come from the banking world, I come from the business world. And so I know enough of these conversations, and my husband, of course, works is a partner with you guys. And so people are, he's told me stories about people declining insurance because their response is things like, well, at worst case scenario, I can just GoFundMe. At worst case scenario, she can go get remarried, just awful things. It would just make me feel, And it's become the GoFundMes are increasing dramatically. And, I think I was talking to you the other day, Kathleen, and I would love for both of you to have some input on this about GoFundMe is not a plan. Is not what I can't remember the statement you said.
Yeah, GoFundMe is not life insurance, right?
No. Yeah.
You have to be responsible for your own financial future. Are you going to GoFundMe a retirement plan too? Like, and I did hear that once in a story that, well, she'll remarry, right? And I'm like, I just kept thinking, like, I just really hope she can remarry for love and not for money, if that's the situation.
Right? Yeah.
Like, that's a horrible situation to put somebody in, your wife and your children. That's just terrible.
Well, definitely, GoFundMe is not life insurance. And I do have a message for those who's planning to use GoFundMe as a strategy. So let me suggest you to check with a province of your city for real cases, because there are a few things you need to know about GoFundMe. The first thing is it's public. You have to lay yourself out there to tell people the conditions and what you are dealing with. And you have to admit you haven't done any planning for yourself and you haven't been responsible for yourself. And most importantly, you need a very compelling story at a point in time. Even though you do so, there's no guarantee that even if you put your story out there, it is the winning story, because others might be more compelling and bigger and overshadow yours. Mm-hmm. And for a stranger who is donating that dollar, they must decide, which story is more compelling to them. And for me, I certainly feel for you, for those people, but not necessarily want to reward someone who hasn't done their own financial duty to themselves. And in my opinion, GoFundMe is for those who have coverage, but not adequate. They are not poor people or irresponsible people, but for those people who are hit with unforeseen circumstances, like something really big, and who cannot manage alone. So that's what I would see, GoFundMe.
An unplanned, like there's no way you could have been prepared for it kind of scenario.
That's correct. Like millions. Talk about millions. Yeah.
Yeah, those are the kinds of things that I would donate to, but as a lack of preparation, I tend to, come on, guys.
I don't even think GoFundMe even hits the mark. Take someone that's earning $100,000 a year, and that's going to work another 10 or 20 years. They need, $1 million to $2 million of coverage to replace their income for their families. And that's the money that pays the mortgage and pays for the kids' education and pays for food and shelter, electricity, and water, and all those things. You think a GoFundMe is going to raise $1 million? It's not.
No.
Yeah.
No. You're lucky if you can bury the person from the money. You're lucky if you can do that.
So here's a question for you. if let's just, I mean, we talked about two scenarios where the husband in that scenario would say, no, she can marry, or we can do a GoFundMe or whatever. What would you say to a woman client? Can she take out life insurance on her husband? Like, does she have more control than maybe what she thinks over this decision about getting life insurance on her husband?
In fact, when I work with clients, I'll often ask the woman, the wife, how much coverage she wants to have on her husband, and vice versa, right? Yeah. And if you're stereotyping and saying that the woman, maybe she's a homemaker, or it makes nothing, or the spouse is the stay-at-home dad, how are you going to just even replace that? You're going to have a full-time nanny? Just even the cost of that. So I think that people need to be responsible for themselves as to how much coverage they need, right? It's gonna be an emotionally devastating time. It's not unheard of to have to take 6 months off just for an emotional break and deal with the children and the emotional.
This is
emotional on every level, but I'll add to that the financial devastation when you don't need to. Pennies on the dollar.
You wanted to say something there?
No, I'm saying that this is a great topic to discuss, because definitely a lot of husbands might say, my wife doesn't need life insurance, or the wife said, I'm not a breadwinner. For me, I would say, like, how do we define a monetary value of a human life? Is it simply based on replacing one's earning potential, or covering off needs of the loved ones left behind? And for me, it is critical to include into this calculation the incredible value of the priceless intangibles, vitally important things many women do for the families while not earning a paycheck or working on a part-time basis. So I always said that we need to rethink how we view the roles in our family, how we value the unpaid role we are responsible for. So much more is lost than an income when a provider dies. But be careful when we use the word provider. Besides personal value of an individual that is always irreplaceable, whether you bring home a paycheck or not, there's a significant financial value to your life of a stay-at-home mom or an employed spouse. So, you provide substantial support for your family that your spouse or a partner would have to outsource in case you pass away. So one of the simple practical ways, life insurance will help is to cover off those costs and provide a financial safety net to your family. So you guys just now talk about the statistics. So let me talk about, some interesting statistic, like, Kathleen or Marena, you just mentioned, life expectancy. In Canada, women's average life expectancy is 84 and men's 80. And women are expected to live 5.2 years longer than men. And I want to stress the significance of the longevity gap, longer life expectancy. Women live longer and typically marry older men. 7 out of 10 baby boomer women will become widows and live for another 10 to 25 years afterwards. So women will live the consequences, good or bad, of how much life insurance their man had in force. And there's a 70% chance that wives are beneficiaries of their husband's life insurance contracts. So here again, explore the value of properly structured infinite banking plan. Having to live 15 to 25 years longer than the spouse, infinite banking provides much needed liquidity and control of their finances. And it is a simple way to replace, lost CPP or OH securities or retirement income and provide comfort. And, you guys, talk about just now another common objections about, male spouse. The male spouses will say, my wife does not need insurance. She will simply remarried. Right. And did you know that 80% of men die married? And 80% of women die single? Having sufficient capital and control of her finances gives a widow better life choices. Choice of partner, choice of step-parent to your kids, and choice to remain single. And to my point, everyone who has someone that depends on them, provides immeasurable value to others, needs life insurance.
Absolutely. You know, and
great stats. Great stats.
Yeah. Yeah. You just made me think of something too. The intangibles, especially you, Mary, it gives them an ability to maybe take care of their elderly parents and
Sure.
you know, just all the intangibles that you think about of having that ability to stay single without having to worry about, do I need to remarry so that I can survive here? That's just an awful thought.
Yeah.
Do you want to add in there, Kathleen, before I go into another question?
No, I thought Mary's stats were amazing.
They were.
She really captured it.
Yeah. Absolutely. Okay, I want to ask you guys, you know, I have a lot of girlfriends, a lot of people starting families that I see and talk to, and I would love to be able to just ask you the question, like, what are some of the mistakes that people make, or what are some of the things that women aren't thinking about these days, starting a family, just in general, that you would tell them, some tips, tricks, mistakes, that kind of thing.
Want to go first, Kathleen?
Sure. Actually, one of the things that comes to mind, gosh, it was just a disaster. So young couple, the child is under 5, I'm not sure the exact age, and he passes away without a will. Did you know that the child was entitled to 50% of the estate? And
Really?
so she only gets 50%. This is in Ontario. I don't know, the rules can change by province for sure. But imagine that now you're only in control of half the money and the rest is basically sitting in a safe trust earning next to nothing. Like how your life will change. Like forget about that detached house with a double car garage. You're in a condo now, right? Or worse, renting an apartment. Like you're it's bad enough that you've lost your husband, that your son has lost his father, but now you have to upheave the entire situation with a new schools, a new home. It was just devastating.
So question for you on that one, was the 50% of the money that was for the child, was that used for the raising of the child, or was this woman now having to take that 50% and raise the child out of that?
I don't know the answer to that, but
yeah, I know I had a conversation with my husband about, you know, the different dynamics of married and common law, and it is a whole book that you want to just get some professional legal financial advice, because it changes. There's some layers of federal, and then there was province to province, it changes. So I don't think there's a black and white answer there, but anything to say on that?
Yeah, I mean, you really want to get legal advice on that. But if you're common law and not legally married, property that is in one person's name does not necessarily flow to the other person. If you're just common law, like the rights of property, that's just one example. And again, I'm not a lawyer and seek legal advice, but if you're going through your situation and assuming that this cottage that you've gone to is going to be inherited by you, and it won't, then your financial situation can look so much more different than you were envisioning.
So will is what I'm hearing. Will.
Get a will.
Yeah.
Carrie, anything to add?
Oh, well, I can talk about, estate planning is huge for women. Yeah. Like statistics are staggering and alarming. The law is unchanging and unforgiving, as are taxes. I like to talk about taxes. According to the Angus Reid report, fewer women have a will in place, like 46% of women versus 53% of men. The difference is significant. Even worse, in Canada, 51% of people, both men and women, don't have wills in place. So one of the stated reasons is because the cost is too high. Okay, so let's look at the consequence and the cost of inaction. Estate planning for women is very important. Like with no planning in place, consequences can actually cost more in the long run. Not having a will and not having a power of attorney in place can lead to additional avoidable costs and time delays in the event of death or incapacity. Like, for example, if you got hit by a bus and you are in a coma, or you have a disease or accident that renders you physically incapacitated, You might not even be able to manage your finances. You need someone to manage on your behalf. Power of attorney helps in these circumstances, and it is important to have someone trusted and capable appointed. If you haven't done that while you have the mental and physical ability to do so, what happens is someone in your life has to go to the court to be appointed to carry out duties on your behalf. So until the court appointing process is completed, nothing can be legally done. This means that if assets need to be sold in the down market, for example, no action can be taken in that case. And for taxes, regardless of whether you are incapacitated or you die, CRA still wants the share. Somebody still must ensure that taxes are paid. Otherwise, your estate will accumulate penalties and late fees. All of this will result in additional costs and delays and stress to your loved ones and to the people who are going to be responsible for dealing with your affairs. So not having an estate plan, not having a power of attorney increases women's vulnerability. In the long run, it costs more for any individual not to have their estate planning in place. This is even more true for women, given some of the exceptional challenges they are already dealing with. So therefore, not if, but when death occurs, you should have all the documents in place to ensure orderly and efficient transfer of your estate and to preserve tangible and intangible values. So that is huge. Estate planning is huge.
So going back to my comment earlier about how women crave security, if they don't plan, they are actually causing great issue to the biggest value that they have. They're causing their own insecurities, their own vulnerabilities. Because, I think that, and I recognize this back in the banking world, is that a lot of people don't like to address estate planning or any financial planning because of it's scary, it's overwhelming, it's negative. I don't want to think about that stuff, or it's boring. What would you say to somebody like that? You just pointed out some really great things, Mary, but what would you say to a woman who's maybe not returning your call because they're not, they're like, oh yeah, because they'd rather go out in the boat and, have fun and I don't want to deal with this overwhelming topic. Like, how do you promote for women to get on it?
We just have to, remind them, like, especially if they are our clients, we have, duties or responsibility at least to talk to them. At the end of the day, it's their choice. If they choose to have fun rather than listening to me, then you know what? That is a consequence of inaction, as I always said. It's sad. But again, not just young people, but even, older clients, I see they don't want to talk about it.
Yeah.
That's happening everywhere, unfortunately.
But I'm glad that you guys are talking about this to show people what can happen. Kathleen,
no, big time. Because, my clients, they know that the first thing I ask, do you have a will? That's my question. I don't even talk about anything else. I talk about estate planning because people don't want to talk about it. Let's address that first. And they listen, though. Don't get me wrong, they listen. They maybe just don't have a chance to talk about it or sit down. But when we have a meeting, right now, Zoom meeting, I talk about it. The first thing, do you have a will? Then we talk about other things. So, but they understand, it's something that they cannot avoid. So
it's good that you bring it up right at the beginning. I don't. Maybe I'll take your advice and do that moving forward. What you're doing is you're placing the high priority on it.
It is because this is something nobody wants to talk about, and a lot of advisors, they might want, not you, I'm not talking about you, Kathleen. People want to talk about, okay, you come to me for a policy or for, they jump into product. But no, I talk about estate planning first. Right. And as I said, it's welcome though. The message is welcoming, and they listen because they realize that, there's a lot of points that we are talking about that they never even thought of, and they like it. They are happy. We have that discussion. So I'm usually very happy. Clients and me happy after discussions about, estate planning first. So I think that is important in my practice, at least.
Amazing. Well, Kathleen, I know there's other tips, tricks, or errors that women make. What are some of the ones that you come across?
Something that's just coming to mind with this conversation, and this is so often I see how much money goes towards hockey and figure skating and pro sports for the kids, and lack of attention to their own financial plan and security. I think that's one of the biggest mistakes. Now, I'll tell you a story, and this story is not mine. It's not my client, but it is a true story. Another advisor I know. They canceled their life insurance for figure skating lessons.
What?
And the wife passed away a month later, and they lost the house, and they lost the figure skating lessons.
Oh my
You see
God.
how sad it is. How sad it is.
No, they are forever on a new and dismal trajectory. Forever.
Wow. You just floored me there. That is okay. Well, there's so much I could say.
Yeah.
I think we need to. Oh my gosh. Okay, let's talk about pregnant women.
Yeah, I do
think
have
a
something
lot
to
of-
talk about.
Yeah, I think, or women that, I'll get life insurance. Actually, let's talk about two things. I'll get life insurance when I buy the house or when I get pregnant. Let's talk about that.
Oh, you see, there are two things. Like either they talk about, either they don't have enough insurance, or they say, let's wait until being pregnant to get life insurance. My point is there's always a need for financial planning. There's always a need for financial protections. So you either need it to create capital that you do not have, or you protect the capital that you do have. And, a lot of clients tell me that I do have group insurance. Great. But I usually said group insurance is not a valid and not a permanent solution. You purchase life insurance with both your premium and your good health. Okay. So let me go further. So taking advantage of a group life insurance benefits through work can be a low cost or even free way to get coverage, but you need an individual policy as the foundation of your life insurance plan. When you leave your job, you usually lose the coverage. Okay. Plus, the amount of life insurance you can get through work is typically equal to 1 to 2 times your annual income. That won't be enough to cover your life insurance needs, especially if you own a home or you have children. So another, big misconception, women talk about is, apply for life insurance. I don't want to apply it when I'm pregnant. It actually can be a very big mistake to wait until after pregnancy to apply for coverage. That's because women can develop conditions during pregnancy, such as gestational diabetes or conditions after giving birth, such as postpartum depressions, that can make it even harder for them to get coverage or get a good rate. So plus, once you have a baby, the last thing, trust me, you want to think about is paperwork and doing an insurance exam. So this is something you can take care of before you have the baby. So my point is, the need is always there. Understand the need, understand the cost and the risk of inaction, and take steps as early as possible to secure the coverage and control of the finances. So that's my message about that.
Yeah, just sort of building on the group insurance is also mortgage insurance, which is worse. So just like Mary said, people often wait till they've had the baby to get insurance. They also often go and get, when they buy the house, they're sitting at the bank getting the mortgage, and they get mortgage insurance. I mean, if you ever want to see an amazing expose on mortgage insurance, Google Marketplace. The show's called In Denial. And it just shows how awful that mortgage coverage is. First of all, if you change your mortgage company, which people do, especially in Canada, often every 5 years, they'll change their mortgage. Mm-hmm. You may not be insurable. So if you want to be able to move to a different mortgage company for a better rate, are you giving up your insurance? Mm-hmm. The difference is mortgage insurance, all they do is they pay the mortgage, which is typically a declining balance during the term. So you're paying the same amount of money and getting less and less coverage. Much better to have personally owned that you control. And the bank isn't protecting you. They're protecting that debt that they have. Yeah. So they choose to pay off the mortgage with the money. Whereas if something were to happen to your spouse, personally, I would rather have the money with me so I get to choose what to do with it. Help replace his income, help fund the children's education. I don't necessarily want it all going towards paying off, paying off the mortgage. And the other thing is that mortgage companies underwrite the insurance at time of claim, whereas personally owned insurance from reputable companies is underwritten at time of application.
Mm-hmm.
So I want to prove now that my blood work is okay. I don't want to have to prove in 10 years that 10 years ago my blood work was fine.
Wow.
Right?
Yeah. Wow.
So,
yeah, that's about choices, right? I mean, you nailed it on the head. Imagine a woman, or any spouse, but we're talking about women, and their mortgage is paid off. Great. I don't have a mortgage payment, but I actually can't, I've got, 3 young kids, I can't work, or whatever the reason is, or have not worked. And therefore I can't find the employment to pay for that level of expenses that I'm used to. So somebody says, oh, well, why don't you go remortgage your house? Well, there's one thing you need to remortgage your house, which is an income. And if you don't have an income, then you can't remortgage your house. So the whole point of having that mortgage insurance was just not really great. It's the choice. And it actually brings up an interesting topic that I've recently come across is, and this is something that you had mentioned earlier about group insurance. What happens if you leave your job? Well, this all leads into the fact that women don't just leave their job because they want to change job. They leave their job because things are really stressful. They're unhappy. Turns out they did want to be a stay-at-home mom, whatever. There's this whole thing going on right now. It's called trad wives, which basically traditional wives that I've come across. And for everyone out there, or the feminists and all that stuff, it's not about women becoming submissive. It's them going back to the choice of saying, you know what, I would rather be the one that has a say in how my children are raised versus remaining in the corporate world and fishing them out to daycare. So I respect a choice no matter which way. But the point is that I would definitely say a lot of women, and I've done a lot of personal study on this psychologically, is that they want that corporate world, but they end up going, actually, maybe I don't want this. And therefore they give up the group insurance, right? They give up the ability to earn income. So have you guys come across that fad right now, the trad wives?
Yeah, I mean, I live in the suburbs, and I see that a lot. My subdivision has a disproportionate amount of, for instance, policemen. Okay. So with hectic schedules and a lot of stress, so there's a lot of stay-at-home moms in the area that I live in. Also, a lot of them just want more control over their lives, right? And want more flexibility and want more lifestyle. So maybe they're still going to work, but they're going to start home-based businesses, that kind of thing, either immediately or eventually. And those types of things don't come with group insurance.
Right.
Mm-hmm.
Mm-hmm. Absolutely.
Yeah.
How about you, Mary?
Well, sure. I mean, I just talk about that group, but another thing that I see a lot is a lot of clients think that I don't need life insurance because I'm young. I'm just actually very young. Why I need life insurance?
Right.
And I usually, but again, we know that it happens to everybody. The unpredictability of insurability is the reason of getting life insurance as early as possible. Waiting can be very risky. You might not be able to qualify tomorrow. Yeah. Tomorrow, it may be too late. We are all only one heartbeat away from immortality. I always tell clients, since you need life insurance, you need it today. Because life insurance always creates a positive financial impact on the family unit. Therefore, you need it today. When you can get it, you secure the coverage for your family and lock in the premium. And I always told them, the premium you pay for the life insurance is not the problem. It is a solution to the problem. And I often said, like jokingly, life insurance is just like a parachute. If you need a parachute and you don't have it, you will never need it again. So the earlier you obtain coverage, the less risk you have that your health may not be ideal, and the lower premiums you lock in. So you also take advantage of longer and earlier positive compounding. So yeah, I always see a lot of young clients make that mistake. I mean, I'm young.
Mm.
Yeah.
But they don't save any money waiting. They think, oh, if I get it in 10 years, when after I have a family or whatever, they don't save any money because they're going to pay a higher amount for fewer years. And let me tell you, like 99% of the time, health gets worse. It doesn't get better.
You're not getting any younger.
We all know that.
That's you as you get older, you develop medical problems, you gain weight, you get diabetes, heart issues. Like it just doesn't get better. Rarely.
Mm-hmm.
Well, we have released this video in honor of Mother's Day. And you guys are talking about a point that really brings up insurance on children. And I know that from my perspective, I have 3 stepchildren, and I've seen them throughout the high school years. And I'll tell you, there is an epidemic in the high schools of kids' mental health not being great. And I don't think a lot of people realize that that anxiety and depression that your child has in high school that is concerning in its own right actually can have an effect on whether they are insurable in the future, let alone just normal life happenings. Can you guys comment on that? Because I think there is a value where people think, a child doesn't need insurance. Let's talk about that.
Yeah, well, not getting insurance on children is a common, mistake as well, in my opinion. Because they are missing out a wonderful opportunity to lock in lowest possible premium rates, secure the coverage at the time there are generally no health issues, and start building long-term values as early as possible. If you understand and accept infinite banking plan and principle of controlling your finances, properly structure policy on the life of your child, most likely, our whole life, is a fantastic opportunity to set your children up with a plan that will benefit tremendously from the early positive compounding. That's for me, it's huge. Children policy, children insurance is huge in my practice, exactly for that reason.
Yeah, I mean, the benefit of insurance on children is you're guaranteeing their insurability now.
Right.
Yeah.
Right.
For sure.
If, as you say, that they're in high school and they're taking medication for anxiety, then that's on their medical record, right?
Yeah.
And that could impact their ability to get any insurance, or if they are able to, it will cost them more, right? And don't forget, the policy that Mary's talking about is an infinite banking permanent cash value policy that has access to the cash. We're not talking about, term insurance that will expire or get too expensive and
Right.
You're throwing your money away. Mm-hmm. This is, guaranteed to go up in value over time, the compounding growth, the tax advantaged growth, and guaranteeing like the insurability of your child. So it can make it really smart. I also love the fact that parents will be the owner of it and they can gift it to their child when they choose. It doesn't have to be when they're 18, which is not always the most responsible age.
Yeah.
I always say this could be a lovely gift, when they get married at
Yep.
25, 30, whatever, or
Yeah.
when they buy their first home.
Exactly. And then, transferring from parents to children is tax-free as well.
Yeah.
So take advantage of that. Like there's no other gift you can transfer to the next generation tax-free. Think about that. If you have a property, beautiful, but somebody have to pay the taxes first. But life insurance policy, dump in all these overfunding and then pass it on is a very efficient wealth transfer strategy that you can consider down the road. Yeah, definitely.
Grandparents do it too.
All the time. Yes. And they love to pay lump sum. On top of that, yes.
Yeah, I love that. And I think you both have brought this up in many different ways throughout this conversation, which is that you need life insurance in your life starting it when you're a child not only is a great gift and it's insurability, but you're not avoiding the inevitable, right? So why not do it early? Why not benefit early? Why not compound your returns early? Yeah.
Yeah. You in theory pay the same price because you pay a lower amount for longer years or a higher amount for less years. The only thing is that, 10 years from now, they might not be insurable.
That's right.
So,
and that money can be used to fund their college even, yes?
Everything.
Yeah,
Everything.
Fund college.
Yep. Down payment for your first home. That's, that's definitely
start
possible.
A business.
Yep. Everything.
For anything you want.
Everything. It's beautiful.
And I mean, you can actually access the money as well if you wanted to borrow against it to buy an income property that's going to fund a child's education or something like that. So it has multiple
purposes
for sure.
Purposes for sure.
Yeah. Lots to learn about for people. Obviously, there's the structure and the use. And I know that you ladies are here to guide people through that process and the education process, and you're very dedicated to that. And I know we'll be talking in the future more because we're excited to do a couple more videos specifically driven toward the women conversation. And I really just want to thank you today for joining me and chit-chatting, and can't wait to do it again.
Thank you. Thank you, Marena. Thank you, Kathleen.
Thank you, ladies. It was good.
IBCanada Group, your independent authority for information on the infinite banking concept.